Hey guys, welcome back to another update of my Canadian Dividend Investing Portfolio series. In these videos, what I'm doing is I'm just documenting my journey as a Canadian dividend investor, weathering the storm as we get all smashed by the stock market and seeing how it goes and tracking everything in this Google Sheet that I made. So yeah, if you're watching the video, there's links to everything that I use in the description below. I use Wealthsimple Trade as my broker. It's a really nice commission-free trading app. I use the spreadsheet to track my performance and really understand my portfolio. It's in Google Sheets and I made it myself, so if you do download it and you've got any issues, you can always just send me an email. My email is in the welcome tab there, and I'm happy to help anyone to make sure that it's working perfectly. So yeah, let's just get into it. Before we go over the summary here, I just need to update a few things since the last video. For example, I made a deposit and I received some dividends. So right now, for example, I have received more than this dividends amount for May. So let's go and add in those. In the dividends tab, we can actually just scroll down to the bottom here. This is a master list of all dividends that I've received, and how the spreadsheet works is you need to add in the dividends as you receive them. So let's drop into my broker, which is Wealthsimple Trade, and I'm going to go into my activity tab here and filter for dividends. And you can see here, actually the last one that I recorded in the spreadsheet was this one from Ryokan. So there's 1, 2, 3, 4 dividends that I need to drop in as well. So let's bring those back into the sheet. And typically what I do is I just look at my phone screen or I write them down on a piece of paper and just transfer them in here. And I also made a deposit earlier today of $350, so I need to log that as well in my spreadsheet, so I can just drop this in here while I got you. It is $350. I made it in Canadian dollars, and today was May 16th, 2022. So now my portfolio is totally up to date, or my summary is totally up to date of what's actually in my account. And now it makes sense to start talking about the totals. So my stock value right now is sitting around $75,277. Actually, it's just jumping around a little bit. It's actually going up today, so that's really nice to see. And I have $410 in cash, which you can see 350 of that is my recent deposit. A little bit of change was left over from the last time, and around $40 or something was in dividends that have come into the account that are waiting to be spent. So that puts my total account balance around $75,700, and I'm going to be spending most of this cash today to bring my stock value to around that value. Now, my total gain at the moment is about 5.5%, $3,900. This in the last, basically over the weekend now, is finally starting to recover. You know, a month or so ago, this was up about 10% or something, but the entire Toronto stock market has really taken a beating in the last week, so this is okay. I'm not too worried about that. The stock market goes up and down all the time, and you just have to weather the storms and not panic sell and just hang on and enjoy the ride. And something I like about holding dividend stocks is even when the value drops, I'm going to keep getting paid my dividends. As you can see, all of these dividends are rolling in all the time. And if I just chill and wait for dips to go down and come back up, by the time they come back up, I'm okay. And I've been, taking dividends that whole time or receiving dividends that whole time. So it's pretty cool. And if you manage to buy, while the stock market is down, you actually buy those dividend stocks for less, which means that's pretty much good for you in the future because you'll buy those dividend payments for a less amount than you would have if the stock price was high. So if you've been watching my videos, you'll know that at the end of the video, I always come back to this number here and compare how much it increases based on the dividend stocks that I buy. And I will do that in this video as well because I'm going to spend around $400 on stocks. And we're going to come back and we're going to see this is increased by some amount. But if you have also been watching my videos and you've really been paying attention, you might notice that at the end of my last video, this number was sitting at $3,108, which I think I made on Friday, and now today is Monday. But now it's sitting at $3,134. So this number went up without me buying any stocks, and that's a really important thing to realize. That is coming from dividend growth. So some companies that I hold in my portfolio tab increased the amount of dividends that they pay per share, basically kind of like over the weekend or whatever, that's when it got logged. And now I can expect a higher annual income because those companies are now paying me more without me doing anything. I didn't have to buy any more stocks. They just said, hey, for every share, we're just going to pay more money. And that's dividend growth. And that's part of what I'm doing here. This number increases as I buy more and more dividend stocks. But this number also increases when companies just naturally decide to increase their dividend. So for example, what I mean by that is in the portfolio tab, we can take a look here. at all of my companies that I hold, all of my positions. Whoops, whoa, there we go. And this value here, this is the forward annual dividend. So this is the amount of money per share that each of these companies will pay you per year. So for example, I have Metro here highlighted. For every share of Metro that I own, they're going to pay out $1.10 per year. And because I own 21 shares, I can roughly expect, or pretty much expect that I'm going to receive $23.10 per year from this company. Now, I also track how much I actually receive, and so far, since I started holding this company, I've received $17.95, and I haven't always held 21 shares. It hasn't been exactly a year. I started out with 1, and then 2, and then 3, and so on. But this is a reliable number to look at. So I really wanted to figure out where this extra amount of money came from. It was like around 20, like mid 20s, increase. And I noticed here actually that HR.UN increased their dividend. So if you were to go back into my previous video, you'd see here that the forward annual dividend was actually 52 cents and they've increased it to 55 cents, which means that my estimated annual dividend income has increased by about $7 per year based on the number of shares that I hold. Because I'm pretty much getting 3 cents more per share times about 309, and it works out somewhere like that. The other one that increased over the weekend was Algonquin Power and Utilities, which is right here. And so if you went back into the old video from last week, you'd see that the annual dividend was $0.86 per share, 86 cents per share, and now they've increased it up to 94. And because this is a pretty big position of mine, I have 200 shares. So now I'm going to get 8 cents more per share per year just because they like their shareholders, and that increased my annual dividend income by about, around $16, give or take. I'm kind of rounding with the cents or whatever because I went, the two of them combined went up like something like $25-ish per year for my overall portfolio. But anyways, that is something that I really like about dividend investing. It was a nice little surprise to see that number increase, because what I'm going to do right now is I'm going to buy some more shares of companies, and you're going to see it happen. And then we're going to see that I'm trying to grow my annual dividend income by buying more shares. Like I said, it just grows by itself, which is pretty awesome with dividend growth companies. So to get into the companies that I want to buy today, I was pretty much exclusively looking at companies that are in the red for me, especially just given how sketchy the stock market is. I don't really feel like buying companies that are in the green because I think that they're at risk of falling, in this period of time. So I figure I might as well just buy companies that are already in the red and get some good deals on them. So one of them that I was looking at was Manulife Financial. This is a relatively small position of mine, under 2%. Very strong dividend of 5.85% in the financials industry, which is an industry I'd like to increase my holdings in, because on my summary tab you can see that financials only makes up 11.6% of my portfolio, whereas like real estate and utilities are a bit more. And so I'd like to kind of spread this out a little bit and even it out and grow some of these smaller sectors that I have. So that is kind of along the lines of what I'm thinking. Good yield, good company, and a good price right now. So if I buy into this, if I buy more shares, I'm basically going to reduce my average cost, which will make it easier for me on this individual position to hopefully go green in the future, back into the green, meaning that my average cost will be lower, so that I don't have to go back so high to get back in the green on this one. And then another one that I was looking at as well is Savaria. Savaria is a really, really beat up company, and I actually was looking at them last week. They were down, from my perspective, in my portfolio, down like 28% or something like that. And today they actually jumped. So today is Monday, and they jumped up something like 5%. I can show you in Wealthsimple in a second. So I actually kind of wish I bought them last week, but it doesn't matter if they're down 5% or up 5%, because I'm still down 25% in this position. So even if I buy a few shares, I'm really going to kind of impact my average price, and also just buy this dividend, of course, for much cheaper than I have previously been buying it for, which is okay for me. I don't want to throw in, I don't feel like doubling this position or anything, but I think I'll throw in like $100 or $200 and just kind of start chipping away at this this really bad unrealized loss that I'm having, and kind of bring down my average price. I think if I have any money left in that account, I will probably just drop it into Bitfarms. Of course, Bitfarms is my sketchiest stock, and just completely beat up like the entire crypto industry. I don't want to go all in on these guys, but if I've got a few dollars, I might as well throw it in and try to bring down this average price. It's sketchy to see, but I actually do own some crypto as well, and pretty much all my crypto is like just smashed to bits as well. So I'm a bit used to seeing such high losses with crypto related stuff, so it doesn't stress me out so much. Like if I had this, 48% loss on like Telus or something, I'd probably be panicking. But with crypto stuff, not too worried about it. So guys, let's jump into Wealthsimple Trade then and go search for some of these companies. So let's start with Manulife Financial. These guys, yeah, they're pulling up today. That's nice to see. Of course, I could have got a slighter discount if I bought in the morning, but I actually had today off work, so I was sleeping, and that was worth it. So I want to put in around $200 at these. So they're $22.64, so maybe like 8, or let's see if I can get 9. How much would that be? $203? Yeah, I think that's cool. I'll go with that. I'm going to buy these on, I'm going to use a market order, and I'm going to put them into my tax-free savings account, so that's cool. I'm going to confirm the order. And then next up, I'm going to take a look at Savaria. So SIS, yeah, you can see here they're up 5% in the past day. So like I was saying, I wish I had bought them last week, but you can never know when the bottom of the, if we're going downhill, you never know where the bottom is. And this actually might not even be the bottom, just because they dropped off here. If you look at Savaria's all-time chart, you can see they're pretty wild up and down, and it's not that unreasonable that they're just going to keep going down beyond this, but I'm just, like I said, just going to throw in a little bit of money at this point and work on chipping down my average price. So 13 shares, let's see how many I can get for around $200. I have 206 available, and that would cost 206, so I'm going to have to drop down to 192. That's fine. I have to be within that 5% of the price for Wealthsimple to let me use a market buy, which is totally okay, and we're going to hit confirm on that order. All right, cool. Looks like I have a little bit of cash left as well, so I think, like I said, I'm just going to go drop it into Bitfarms, probably buy like 1 or 2 shares, and see what I can do here. Hopefully we don't drop back down to 44 cents, because that's really going to hurt. But yeah, we'll just see how this goes. So how many can I pick up for $13? Oh, nice. They're so cheap. I was always buying them when they were like $5, which is why I'm down so far. But now actually I can get so many. Okay, nice. Very sketchy. Don't recommend copying what I'm doing at all, by the way, guys. You could definitely just lose all your money in a stock like this. So we're going to hit confirm on that. Pick up 5 and brace for impact. So then I just want to check the confirmations here in my activity tab, and for example, I'm going to grab the quantity that I bought of each one and the unit price that I paid, and I'm going to bring that back into my spreadsheet. So I want to log those in the transactions tab, which is just a giant master list of all the transactions that I've ever made. So I want to scroll all the way down here to the bottom and just drop them in, like I said, exactly as I saw in the activity tab on Wealthsimple Trade. And once all of those are in, I can come back into the portfolio tab and take a look at some of my, average costs and stuff like that, see how they have been affected. But ultimately, I'm looking here for the summary tab to see how much the dividend income has increased. So at the beginning of this video, we were sitting around $3,134, and now we're at $3,153. So that's an increase of about $19 per year, which is pretty nice. And if you include the kind of $25 as well that it went up over the weekend, you can really see how the combination of me buying new dividend stocks with some of my own money and some of the dividend money that I have received, like reinvesting that, and getting that natural dividend growth from the companies themselves, this number is just really climbing all the time, and that's exactly what this is all about, trying to grow this as much as possible. So eventually I can just maybe one day use the dividends and stop reinvesting them, and use them to pay for things in my life or entirely live off of or something like that, but basically just get this as big as possible. Whatever the stock, the value of the stocks is doing is good. You want that to be going up as well, but basically you want that to be going up and this to be going up, and then you're pretty much good. So guys, if you watched the video, if you watched it this far, thanks a lot for watching. I'd love to hear what you're up to down in the comments, and do you pay attention to the actual dividend growth of your stocks as well? I'd be curious to know that. So guys, I'll see you down in the comments and in the next video.